All right. I went ahead and updated my forecast for Clover Health. Looking forward, this is what I got right here. You can find it on my what was it, communications or community? Yeah, the community area in my YouTube channel. I like to post little things like this from time to time. All right. Now, I created this volume profile right here. You can see it gets really intense as far as like the map that it's using for like the footprint data and volume and other stuff going on there as well. I mean, I could explain it to you, but we have to sit here for a long time and go piece by piece. So it's not what we're here for. We're here for Clover Health stock, Clover Health, and this is the little board that goes along with it, the table. So now I kind of improved my cycle analysis indicators a little bit, so they look a little bit different. I got the price action cycle analysis, and I have all right, and I have the CVD cumulative volume delta cycle analysis. I was running it on the 6 day, but I changed back to the week. Um, Still running the 3 day, still running the 21 day. So that's still intact. And in the background right here, you can see that's the actual candlesticks of cumulative volume delta. That's the CVD candlesticks right there. I don't like using them on the main chart. This is more of an oscillator that I like to use as a directional bias indicator. It's kind of like if this white line was the VWAP, then this red line would be price action. So as long as it's above it, it's positive. Below it, it's negative. Now it always bottoms out and tops out. So those are what cycles are about, right? Like this cycle, this cycle. So it helps me, understand where we're at the point of time. It helps me be. It helps my situation will be a bias to the positive or to the negative in direction. So as you can see right now, we just passed up into the positive territory as this is still fading, which is more or less a good thing because in order for the momentum bars or the whale signal bars or the institutional ownership uh, signals are being displayed, this can exist. This only exists because this exists. They can't both exist at the same time. But you do have your special occasions when they can, like how it happened right here, how this bottomed happened. And then that means there was a lot of buying going on as well as a lot of selling. So it's kind of like, what do you call it, divergence. You see, the CBD was going up as price was going down. That's basically what it's representing right here with this cloud beam in the back, as well as the we call it volume. Well, it's like uh, you know signals for there's a lot of participation going on, buying going on, right? Um, because you want to be inverse to that, right? You want to sell while everyone's buying, and you want to buy while everyone's selling. But you want to get at the best deal possible, so you want to find the tops. And how I got this set up, and you see these little bars here and these big bars here. Red ones do mean there's going to be some kind of consolidation going on there. But once you don't see any more of the bigger bars and they start flattening out to the smaller bars and then start going red, that's the sign of a topping phase. And then you get this zone right here. You know, this is a topping. This is the orange one is the highest rated, uh, you know, selling pressure zone that I have on here. And then the blue one is the buying one. The red and the green are they're like somewhere in between. You know, they're not really that good. They're not really that bad, but there's something going on there. It's like maybe anticipating something pretty big soon, right? And then when you get them both at the same time, that's something special. You get like this green within this. I mean, this green within this blue. That's something special. I also got one kind of like a default one right here in the background. You can see it right here, 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 here. There was a lot of selling pressure going on there. You would expect a bounce on the next day, at least. Like at least the next candle should be higher than the candle that it was printed on. So we had one here on the 5th, and we had one here on the 16th. But it did go lower, but it closed higher. That's exactly why it's down here, not up here, because it's just like if it starts to print, you start to see it. You could, I'm not sure the odds of success, but you could basically say that the next day is going to be a green day, but it wasn't too green on this one. So that's the reason why the blue is dominant. That selling is dominant. The cycle is down. The major cycle, the green one right here, is down into a sell zone. So yeah, that was a dominant. Even with this little green here, it's no way. You can't compete with this, with this, with this. It's like stepping on ants. But my volume profile, I got it set out for 1 week. Let's zoom in here. I got it set out for 1 week. Now it's anticipating where the volume is going to reach as the high and the low, kind of like if you could understand where the price would be at top, right, and then at bottom, right. So this one within a week is trying to suggest where a top and a bottom in the price would be in the profile itself, right. With this being the point of control, pretty much right here. Um, but then you have the point of control of the positive and of the negative. That's different. You got that right here and here, which means the negative structure is stronger because the overall momentum is in that scenario. Not so much, but there's more buying going on and selling within that week itself. So the particle filter has it set up as bullish, up at 56.4%. It agrees 98%, 9 out of 3 votes. Cover. So yeah, it's looking pretty good. Um, and that's at that 56.4 right there. You got the slow, you got the fast, and you got the slow, amongst other things. But so we're looking good here. It's positive, bullish read. Looks like it wants to come up to at least this, somewhere in between, at least that price, like almost $5. Um, this is agreeing with it. This is agreeing with it. The cumulative volume delta cycle analysis is suggesting that it's going to do so. It's going to test 5 again pretty soon. Um, you can see the divergence on the cumulative volume delta candlestick right here. How this one was going down while this one was going up. I probably need to zoom in and see how it was structured to an upwards flow, and this one is structured to a downwards flow. So that's divergence too. Then you had a lot of you know selling going on here, but you have to inverse that. You would think it's selling. It's really you need to be buying, right? Uh, so yeah, that's how that works. We do have this other cycle analysis indicator right over here. Um, it predicts where the cycles could be coming to an end within the time frames that it has calculated. You can see these little dots here, 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 and here. That's when all the cycles of all the different time frames came to a conclusion right there. And that's pretty much like what I was looking at as far as time frame goes. But not price. I figured we wouldn't get no lower than 180, but we went to 160, I think. Let's see, center it 164. So I don't think we're going to go below $4. There's a huge area of demand at $4 in the dark pool. That's the reason why we keep on bouncing right here. No one's that stupid to sell to to other smart money's not going to sell to smart money like that, you know. So it's not going to happen. Dumb money will. I think they already have right here. So I think we got solid support at $4. We might be able to test $4, even get to $3.90, but we will bounce dramatically. We just got to break this right here. This is that 490. This is a fair value gap to the negative side. We got multiple fair value gaps to the positive side here, even one recently here, which means more than this one does. It kind of means more than this one does. But since that's next one to it and it's negative, it does hold some weight for the resistance side of the board. And then, you look at the volume profile, and it suggests at this point in time, we should see highs at here, which still falls into the fair value gap, and there, which is just above the fair value gap. If we do break this, then we're breaking through the ceiling of this volume profile prediction price, right? $5, and say exactly $5.01, $5.02. That's what it's suggesting. It's like 60% sure. I mean, not sure. 60% more positive than negative. The odds were over here. All right. So we talked about those two things. We got an order block right here, structured at 2% at $3.36. We'll never see that low price again. But you know, it exists. It's there. So um, we had a conclusion here, there. This is a big one. It's not as big as this one here because it takes that one to be as big as this one. This is a big one. This is like number two. This would be number. This would be the bottom. This is would be the runner up. And if we look at it, we got two small time frames there. Say somewhere around this time frame right here. Well, you know what? You can actually kind of like, since they're more cluttered around this area, you could probably say this here has a higher probability of being the bottom for this section than over here in this section. And this validates that idea right here, this crossover. The CBD cycle is going up out of negative into positive, validated. I'm thinking this right here is the short term bottom. This is the next higher low right there. You can actually say that's like a head and shoulders pattern. All right. All right. So yes, it's looking good. It's looking real good. The structure's pretty sound. I don't like one thing with the price action cycle analysis. I don't like the weekly being down with the rest of them being up. Hell, even the weekly on the CVD, the cumulative volume delta is up. But the fucking weekly just like it don't want to give. It don't want to give you no fucks, zero fucks. So that's unfortunate. But other than that, everything looks sound. Yeah, I would expect us already have the bottom in place rather than expect one. The next area of interest is going to be right here. They probably give or take a few days, 5 days or something. So like, it's at 21. So like the October 16th through the 26th, like at the end of October, should be a area similar to this area right here. Depending on how high we go, um, you know, we do have some areas right here of resistance with the block or the order blocks, which is $8, $10.50, and $4.75. You can say it's $15 if you wanted to. So yeah, but mostly, you know, I mean, these indicators really do help me out when I'm investing into a company that's about to go free cash flow positive. So it's like trying to get the right spot at the right time in something you know is going to continue to grow. So we can look at this just for the hell of it. Like these red dots here, here, and here, there was aggressive absorption going on the tape, or not tape. I'm tripping. We need to have it for the tape, but that's what I'm trying to get to. Anyway, you can see how they work out pretty good, especially when you get multiple valuations um, in there, like this one here, that one, this one, and then this one there, the green. It signals it coming to some type of conclusion pretty soon. This one here is the topping area, then they went down. That one there suggesting the bottom. So you can say that's a double bottom between this one and that one. Now it's all hindsight, right? But you have to have experience, and you have to have you know you have to understand what you're looking at here. But yeah, we can do something here just for the hell of it. So there, 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 there. These are multiple ones. It's kind of scary. The fullbacks were shallow as fuck. Yeah. So you would have to set rules up, right? Put one here. So the rule will be whenever you get something like this happening, right? Something like this happening, and this signal goes off, this is NA, right? Those are red dots. But if you don't have, go back to the red dots, you don't have that deep red, right? Um, because this one is still down. You could take a chance on it, but it would probably have to happen somewhere in one of these red candles or one of these red bars right here. And you can ride it down to a certain degree. Timing your exit is important. You can say as soon as this one bounced, right here. So you can sell like say 200 covered calls for Clover Health for this approximately. You would have to find the distance between the cycles rhythms in order to get the a trop calculation on it. But it's all math. So you can say for a week, maybe 2 weeks, right? Because that's like from what December 12th to this first green candle, January the 2nd. That's down near a whole month, actually. You got a lot of time. But this is all just for being able to see how I look at things, right? So let's go back. So right now we're in a good position, like I said. I think we came into a conclusion on the psychoanalysis bottom right here. There's validation of support through the dart pull and the options chain right here, but the option chain does hinder upward movement because market makers do not like paying out. But once it goes to a certain price, they're going to actually have to buy shares in order to make their position neutral. So they're going to have to flip the switch from this right from this to this. Uh, because they're just trying to make money in between. They don't give a shit if it goes up or down, as long as they can make some money in the process of it going up and down. Okay, so yeah, this was the absolute bottom. Psychoanalysis with the CBD it's looking good. Psychoanalysis with the price action is looking good, except for the weekly. We had a buy signal here. That was around this price, which is around this zone, which is when this one lit off within this area. So it looks good, and then it stagnated and it pretty much died off while this oscillator was ticking up now. and then this is fading. This needs to fade more. It needs to drop down to zero. Okay, now this one here, I try to create a forecast on the chart, and it was wrong. So let's adapt it to the new information. Originally, I had it, I think, stopping at this price here at 480 and then bouncing, but now I have it here. So it's coming to a conclusion here with that. So let's move this down there. We're going to say it's going to continue this trend here with these dotted lines. And then we're going to use this right here as major resistance. This is the next level we want to take a look at. It should be right there. Let's draw this one in. Draw that one in there. There's going to be a lot of pressure coming in on the downside by September to the next for the next trough, according to my psychoanalysis, following the trend line. I think we need to move this one here like this. And move that one up a little bit. So yeah, so that's an update on what I think is going to happen. Now this could be the bottom here instead at like $10 rather than $8 or $7. Now this zone right here, I did. If you remember my last video, I calculated the distance between every trough, the big and the small, and I had it set here as when there's going to be a trough coming to an end, right there, and then I have another one set here with the trough coming to an end, which is here, right? So that might actually be a double bottom. Like this is a double. Other than that, all the other things are pretty much the same. It's just this one right here, and then this one right here is different. You see momentum is weak as fuck. It has some various divergences, but that don't mean shit. I'm probably gonna delete that because it follows through with this one here, which don't really mean shit. I haven't seen no success for it. And if I don't see no success with it, then I'm gonna get rid of it. This is successful. This is successful. Now this one's a little bit, I guess, older. You could say. This is a drawing on psychoanalysis when I used to do them manually. Now a suggestion right here towards the end of September, and I think we said that before. Hmm. No, guess not. All right, so yeah, this is what I was looking at. I was thinking um, we were going to see some action like that take place. You can see it's like 75% positive on this one. This is an older model of my volume profile, and it's working on 3 weeks instead of 1 week. So I was expecting, we'll say like $3.88, but when the article came in, it said like, nope, we ain't going below four. we're gonna be bouncing off of fucking $4.30 or $4.20 or whatever the absolute low was. What was that? $4.12. So just it's just not going to get too close to. It's not going to get. I don't think it's going to hit four because, like I said, smart money doesn't want to sell the smart money. So yeah, this is a little bit older. It's suggesting that we would oscillate between here, which is at like $4.75 to $4.25. That's this wave right here saying that we should oscillate between there, which is pretty good, especially if you're doing cash secured puts, covered calls, cash secured puts, covered calls, cash 10,000, 20,000, 30,000, 40,000. It's pretty good month by month, right? Let's see here. So yeah, other than that, I got my best friend over here at AI that has something to tell you. Let's see.
Agreed. I'll tighten it into a research-first presentation. Each section will show the current regime, the supporting fundamental/flow evidence, and the probability implications either side. No extra teaching or background. Clover, current regime and probability map research cutoff, August 16, 2026. 70% technical money flow, 30% fundamentals. 1. Current market regime, bullish reaccumulation, flash, markup continuation attempt. The latest August 15 chart stack does not show a confirmed distribution regime. It shows an intermediate bullish structure that has pulled back, consolidated, and is attempting another recovery leg. Price is around $4.60s, above the major $4 institutional pivot. Multi-time frame momentum CVD alignment has rotated constructively, while the latest forecast study characterized the setup as sideways to bullish rather than a mature breakout. Mobility regime through next major move. Probability bullish continuation higher value migration 55%. Continued 4 to 5.25% reaccumulation 30%. Failed structure distribution 15%. This means the technical model currently gives us roughly an 85% combined probability that Slov either maintains the present bullish structure or continues building value rather than entering a confirmed bearish regime. Number 2. Price structure plus fundamentals. Bullish structure has sponsorship. The larger TradingView structure remains markup, originating from the 2024-2026 accumulation base. The earlier integrated chart identified higher highs, reclaimed breakout structure, and multiple bullish FVGs beneath price. The fundamental side, Q2 revenue, Ploshento $743 plus 56%, MA membership 157,309 plus 48%, GAAP net income, adjusted EBITDA 41 members, cash investments for 43 members, 6-month operating cash flow, 133 meg, no material debt in the study. Probability effect, positive. The P rent consolidation is reaccumulation rather than fundamental deterioration remains materially higher, while the operating numbers stay intact. NUP 3 $4 institutional regime, still intact. This remains one of our highest confidence technical observations. Dark pool study, window volume around $4, 7 days, 15.49, 15 days, 27.31 M, 25 days, 44.9, 50 days, 88.99. 100 days, 99.84 MEMS, 400 days, 171, 130 MEMS, approximately 89% of the 100-day $4 associated volume accumulated during the latest 50-day period in the study. Current read above $4, bullish institutional structures, major support value region. Below $4 with selling confirmation, regime downgrade. Current probability of a December 31 finish below 4, 14 to 17%. 4. CVD plus price improving, but this remains the breakout confirmation we need. The older integrated chart showed long CVD strong, fast CVD weak. Price stronger than immediate order flow. That was a bearish non-confirmation, not a reversal, because the long CVD structure remained intact. The newer August 15 work improves that picture. Multi-timeframe momentum CVD align as constructive bullish, although medium-term breakout confirmation remains incomplete. Probability implication: if short medium CVD accelerate while price retakes 5 and 50s and 550 Pro. If CVD confirms through 550 to $5.75, $6.25, 650 becomes the first clean expansion objective. If price rises but CVD rolls over, breakout probabilities get cut. So CVD currently supports bullish continuation, but it has not yet given us permission to call the breakout complete. Number 5, cycle regime, recovery reload, not exhaustion. The price cycle stack originally showed fast cycle resetting and turning upward, intermediate cycle elevated, slow cycle improving. That is not a synchronized 3-cycle exhaustion condition. The newer August study classifies the cycle regime as unbound searching, meaning directional bias equals bullish, NC equals moderate. Probability implication. Current cycles favor another resistance test more than an immediate breakdown. But the real probability expansion, OEE plus medium alignment plus slow cycle plus CVD, while price is challenging $5.15 to $5.75. That would move the technical regime from recovery toward confirmed expansion. Number 6, whale flow absorption, contested, not bearish. The retained whale chart showed selling near the highs, but price continued holding near the upper structure despite that selling. The technical study therefore classified the situation as selling being absorbed with distribution risk still present. That remains important. Whale selling by itself isn't bearish if the auction absorbs the supply. Bull confirmation. Whale selling fades, plus CVD improves, plus pry equals accumulation and absorption increasingly confirmed. Bear confirmation. Whale selling persists, plus CVD deteriorates. $4.50 fails. $4 fail equals distribution increasingly confirmed. Current evidence still favors absorption over confirmed distribution. Number 7, options plus auction structure. $5, $5.57. Ladder remains active. Existing positioning shows approximately 42,000 calls, around 30,000 around 5s and 50s, and 49,000 around 7, and roughly 115,000 calls in January 2027. Near-term positioning around $4.50 to 5 remains more balanced, which fits the current consolidation regime. Technical probability ladder $5. Current auction. $5.15s, first me 50 or 575, some for breakout confirmation. $6.25, 650 first expansion objective. 7 major higher regime options less price target. This aligns extremely well with the trading view structure. The August 15 chart independently identifies 550 to $5.75's breakout confirmation and 620 and $5.50 6.50 as the first objective. Namashnar 8, medical economics plus price regime. Fundamentals still support the tape. The business side isn't fighting the bullish technical setup. Current BER is approximately 87.6%, while growth Profi remains strong. That matters directly to the probability model. Current combination, price structure bullish plus BER controlled plus earnings positive equals technical rallies deserve more credibility. Warning combination, price breakout ward 94% plus equals technical rally deserves less credibility. Strong bearish combination, $4 breakdown plus BER deterioration plus guidance weakness equals technical and fundamental regimes simultaneously bearish. That would cause the largest downward adjustment to our year-end probabilities. 9, 2027 cohort economics plus technical breakout window. Major upside sponsorship. The 2025 cohort is approximately 21% of membership. The 2026 cohort is approximately 28%. Therefore, roughly 49% of membership moves into a more mature year during 2027. The historical cohort framework indicates improving economics with member tenure. This gives a fundamentally credible reason for the market to begin moving before 2027 earnings actually arrive. Technically, that fits the expected sequence. A, ablish $5, October pressure $5.50, Sue 6. November, December, increasing probability the market begins capitalizing 2027. This is one reason the probability curve slopes upward as we move toward year end rather than remaining static. Number 10, current technical probability map. These are now meant to be read with the current regime, not separately from it. Level, current technical meaning, touch by YE. Finish above YE $5. Current value discovery battle 91%, 80%. $5 fifth end, first expansion threshold 75%, 60%. Sixth major regime transition, 58%, 42%, 60-50. Confirmed markup target, 43%, 29%. Higher regime options target, 32%, 20%, 8. Momentum expansion, 13%, 7%, 10s. Extreme tail, 4% by 1 to 2%. These probabilities assume the current bullish above $4 regime remains intact. They are not static. For example, if Solov closes and holds above $5.50, $5.75 with CVD confirmation, that 58% probability of touching $6 would become obsolete. It should immediately move materially higher. Number 11, month-to-month technical regime plus probabilities. August, reaccumulation, resistance retest. Central zone, 470, 495 pence probable range. $4.25.30 bullish range regime probability, 85%. Primary technical target, $5 to 550 cents. Fundamentals remain strongly supportive following Q2. September, acceptance test central zone 495.25, probable range $4.25.70. Main question, does $5 become support? Probability of seeing 550 by or during this phase continues rising if CBD confirms. Of October, potential expansion regime. Central zone, $5.55 cents. Probable range, 4.30, 6 to 50 cents. This is where cycle improvement plus CVD forward 2027 fundamentals can begin overlapping. A confirmed 550 breakout would materially increase the odds of a $6 test. November, primary breakout window. Central zone, $5.45 nice probable range, 4.40. 6.75 Q3 can provide fundamental confirmation while the technical structure matures. If the company remains fundamentally green and the 5 and 50 T6 wall is absorbed, 6 and 57 probability rises materially. December 2027 repricing window. Central zone, $5.60 to 6.20. Probable range 4 to 50 to 7.150 cents. If Clover enters December already above sixes with constructive CVD, the year-end distribution shifts substantially towards 6 and 50, 7 plus. If it remains trapped below 550, the distribution stays concentrated around 5 to 6. Number 12, current year-end scenario distribution. Scenario probability, YE region. Current regime requirement. Bear distribution 15%, 3.25 to 4 to 5. 4 fails plus flow deteriorates. Lower consolidation 20% 4 out 5 to 5. $5 continues rejecting primary bullish base 37%, 5 to 6.25 cent. Current structure persists. Bull expansion 23%, 6.20 to 7.50, 5.50 to 6 accepted. Momentum expansion 5 7.59 plus. Strong CVD cycles options participation. Probability weighted December 31 zone 5s and 85 to 6 bound. Highest density range 520 for 625s. Number 13, current regime scoreboard. Research input, current read, probability effect, primary price trend, bullish, current regime, reaccumulation, early markup continuation. $4 institutional structure intact, long CVD constructive, short medium CVD improving, confirmation incomplete, slight. Price cycles, reload recovery, whale flow, selling absorbed so far neutral slight. Near-term options balanced, neutral. Long-dated options bullish leaning 5. 5.5 7. Fundamentals, strong 2027 cohorts, strong forward catalyst, BR controlled, monitor. Valuation, neutral, particle filter 59% at P but poor directional validation, minimal weight. The current trading view models 59% 5-day P art and roughly 62% profile P are supportive, but the negative recent Briar skill and roughly 44.4% qualified call accuracy keep that particular predictor from increasing the probabilities very much. Hash current research call regime, bullish reaccumulation markup continuation attempt. Directional bias, bullish. Conviction, moderate. Immediate battle, $5 to 5.15 cents. Breakout confirmation, 5.50.75. First confirmed expansion target. Major bull target, $6.50. 7 Cero plus institutional guardrail. 4 bearish failure target if $4 breaks, 3.40 to 3.60 cents. Current year-end probability weighted target, $5.90. That is the format I would keep for the click-through study. Regime, evidence, level, probability, with fundamentals inserted where they materially change the technical odds rather than separated into their own lecture. Memsi.
Yep. He said it all. try to incorporate the fundamentals and the technicals together on this one. As you can see, so I'm expecting the best month for the stock to be either November or December for this year. Could surprise me being October, but thinking November right there dead in the center. If not, then December. But that's my analysis. That's what I came up with. Joe Schmo, right? W2 employee, baby. W2 employee. Shit. Trying to get it figured out. You know, keyword right there. Cash flow positive. So, in a bullish state or in a range state, we would definitely want to take advantage to any price that gets roughly around $4 or below. And then, sell covered calls at peaks for the decay rate on options typically exponential around, what is it, the last 30 days or last 40 days. So you got to keep that in mind. Vice versa for cash secured puts, right? Um, you can set up some cash secured puts probably under 4 or at 4, you know, and then once it starts breaking to a certain level within a certain time, and you feel comfortable, you can probably do some covered calls on that, looking out towards where the major resistance is. And I don't have a book map on here, but I noticed yesterday, no, not yesterday, Friday, um, that there was a lot of fucking walls around $6. So there's a lot of walls around $6. I think we could retest 550 ish. What was the high in here? 558. So we could probably retest this and see if that wall moves. But as of right now, the cycles are pretty good. They just came off of a low with the CVD. The weekly has it confirmed on the price action. There's more positive and negative in the volume profile for 1 week. In the old one, it's positive 75, 74% on the 3 week. So I would expect some type of, solid move to the positive side around the end of this month. Looking forward to around the beginning of September or the middle of September, actually, for a retest or a breakout and then higher highs, higher lows. But yeah, it's pretty much all I got. It's going on 50 minutes now. That's normally how long it takes me to make a video on Clover Health. All right, guys and ladies, I will see you on the next one.